My question to you, do you think the central bankers are going to try to hold up the UK from leaving their entire regime?
Of course. In fact, I wrote about this yesterday. Not just Draghi, who's pretty much, I said, he let it out of the bag what they're discussing in their meetings because they know very well it's likely to happen. But also the vice chancellor, meaning the number two guy, like it's the equivalent of the vice president in Germany, admitted this week that it's very possible that the European Union will break up. So believe me, the powers that be know this is a possibility, and they certainly know after not just the Brexit, but the Italian referendum, which was, I think it was like 65% to 35%, and the Catalonian secession and the Trump vote. So they know the writings on the wall, but yeah, they're going to fight it tooth and nail. And I was writing this morning about the this Supreme Court of the UK blocking it and saying the Parliament has to vote for it. And I said they pulled in Alexis Tsipras. Remember when last year Greece voted Oxy? They said we want no bailouts, and he said even though you voted me in for just to avoid the bailouts, I'm going to do it anyway. Well, I don't think the UK is anything like Greece, and I have a feeling that while they will try to delay it as far as possible, if they dare try to go against the will of that very proud people, I think you're going to see some real political and probably monetary revolution in that part of the world. But yeah, of course they're going to fight it to the death. They couldn't believe they lost the election to Trump, and they'll fight in every way possible to prevent him from ending their Game of Thrones. But eventually they're going to lose.
What's the fallout from all of this? So let's say the UK, they go ahead and they push Article 50 through. They vote to leave, and we know, Italy, France, and the rest of the countries, like you said, it's going to break apart. I mean, isn't this going to have a ripple effect throughout, Europe and then the U.S., Canada? What's the fallout from all this?
Well, look, I've said this year is going to be the year of money printing and draconian government actions and monetary revolution. The fallout is, last year was the awakening. That's when we first saw the votes. We first saw that the people are going to fight back. First, it was actually the Catalonian secession vote was the first one at the end of 2015, and then the Brexit, and the Italian referendum, and the Trump. So it's where the world is realizing, the powers that be are realizing, and the people are realizing that there's a popular uprising which won't be quenched. And it's really the fallout is that the powers that be fight to the death, and they lose. And it's kind of like you look at the market quote the quote market reaction to the Trump. Remember, we spent all summer with, well, we need, if Trump wins, it's horrible for stocks and it's great for gold, and because they knew Hillary was going to win, and that's how they kind of set up the rigging. And then when it didn't happen, they kind of tried to double up their efforts. Like, wow, we really miscalculated. Okay, we got to create this Trumpflation meme, and that means that's stocks go up and gold goes down, and everything is great, and buying them a little more time and so they could figure out their next plan. But that meme is going to die too, and I think it's going to be very apparent in not so long of a period of time that there's nothing different about the Trump world as far as the outlook for the U.S. economy than there was with the Hillary world. Probably would be at World War III with Hillary by now, but nothing is going to change. He's not going to be able to change anything, and as a result, this last ditch effort to prevent the popular realization that nothing has changed is going to die on the vine, just like all of their other attempts to change reality with rigged markets.
So you mentioned Trump, and Trump is out there doing many different things right off the bat here. And do you think we're going to see a lot of truth bombs? Like, do you think we're going to start seeing real statistical information coming from the government, like unemployment, GDP? Do you think the rigging of the stock market's going to stop? Do you think the precious metals rigging is going to stop under Trump? Do you think any of that's going to happen?
No, I don't think. Well, the rigging the precious metals market is going to end when demand overcomes supply. It'll never end. There's no administration that's going to be like, yeah, let's let the true nature of reality come in, which would be actual economic data showing a recession and actual stock markets collapsing and the bond vigilantes coming in and people buying gold, because that's what will happen if they stop for a second. And Trump, on a personal basis, is his leverage to this system with all his high-end leverage real estate as anyone out there. So look at who he's appointed, all these Goldman Sachs people and billionaires. So no, he has no incentive to drain the swamp. In fact, he hasn't done any of that. He definitely has some free market principles, which I appreciate, although I think a lot of them are misguided, like actually thinking he's going to bring manufacturing back here without causing trade and currencies wars, and of course causing the price of goods for heavily indebted Americans to explode, or repealing Obamacare and replacing with who knows what, because there's really no replacement at this time unless you're just going to take all the free insurance you just gave and take it all back. So yeah, look, I mean, he is not incentivized to make any changes in the rigging of markets, but the pressure, because of all the changes that's going on, the fact that the economy continues to inexorably decline worldwide, that these political revolutions continue to expand, that currencies continue to weaken, and the volatility in financial markets continues to increase, are only going to become more so, especially with him in office. So again, he's going to go all out trying to change things with sheer will, but he's going up against economic mother nature and the unstoppable tsunami of reality.
What we're seeing right now, Obama just left office. Now, the economy, we've been watching it. We know that a lot of the information is manipulated. Most likely we're in a recession right now. But what's very interesting about all this is that all the companies are laying off. And, retail is contracting, stores are closing. And all of a sudden, we hear all these companies saying, oh, we're going to create 10,000 jobs here. IBM, as they're laying off, we're going to create 25,000 jobs. Walmart, as they're, saying that retail is not going well, we're going to create 10,000 jobs. GM is out there saying we're going to be building, yes, manufacturing plants. How possibly can all this be done while the economy is in the shape that it's in? Is it possible?
A lot of it is just public relations. First of all, IBM, I can't believe they said that. They've been contracting the company for like a decade. They're a dinosaur. In fact, I think they've had like declining revenues year over year for like 4 straight years or something like that, and their debt has exploded. So they're definitely not. And Walmart just announced layoffs. And as for GM, they haven't announced any jobs. They just said we plan to build plants. But they're all saying because Trump is all over them. I mean, it's just public relations. And frankly, it doesn't make any sense for them. I mean, he can go in there with all his bluster and say, yeah, we're going to make manufacturing. But the only way he can make manufacturing profitable is if he just prints a lot of money and gives subsidies to these companies. I mean, huge subsidies that are going to cause inflation. And even that, practically speaking, is probably not going to work. It would take years to do all that stuff. And of course, all our competitors overseas are going to devalue their currencies and make them even more competitive against us. So again, he has a lot of bluster, but there's nothing they can do. And, there's no one really. It's like the guy at Alibaba, Jack Ma. Again, this is a Chinese company. What does he care about America? He meets with Trump for a half an hour and comes out and says, I'm going to create 100,000 jobs. But he's not. He's just saying, yeah, I want to build Alibaba. And I would like it so that people in America use it like they use eBay. Maybe some people will sell stuff on it. That's not creating jobs. It's all public relations BS. I mean, the fact is that it's uneconomic to create jobs in this country right now. And it's unlikely that that's ever going to change on a competitive basis unless, of course, Trump wants to do some massively, massively protectionist things, which, as we learned from the Great Depression, don't work. And of course, they invite in a global world response. How about that from people who have more cards in their hand, like better balance sheets and lower cost labor than we do. So again, it's there's only so much he can do by tweeting to the world about how tough he is.
What do you think Trump is going to do with the dollar? I mean, the dollar is at all-time highs right now, and I think we're for many months now that, the value of the dollar is continually moving up. Do you think he's going to start devaluing the dollar?
Well, I don't know how you would define that term all-time high. If you look at the dollar index was 120 or 130 15 years ago, and it's 100 today. Of course, the dollar index is principally the euro, and the yen. So two countries who are destroying their currencies and still haven't been able to make the dollar index go to an all-time high. I would argue, though, that yes, maybe if you had a trade-weighted basket against all the second and third world countries that have been destroyed by this fiat paradigm, that they're all hopelessly indebted and their currencies have been crashing. Yeah, it probably is at an all-time high against many currencies, just not the major currencies. But look, Trump said what we all know. He said the dollar is too strong. And that's what's so ironic. He wants to bring jobs back to this country. And he's also trying to devalue the dollar at the same time, because that's, of course, going to invite everyone else to devalue at the same time. He said yesterday or last week, he said, I wrote an article right after the thermonuclear final currency war has started, when he said the dollar's too strong. He ended the strong dollar policy that's been going on 20 years, which simply means we say we have a strong dollar policy, but we don't do anything that makes it strong. Now he's admitting, look, we're getting killed in trade. We need to hurt the dollar. And Steve Mnuchin, who's going to probably be the Treasury Secretary, said it at his confirmation hearing yesterday. He said the dollar is excessively too strong, and it's bad for the country. So, yeah, he's going to put pressure on the Federal Reserve to keep rates down, not just because the dollar has to be weaker, but because, as I said in my 2.5% enough said in a million other articles, rates cannot go up. It's that simple. Rates go up. That's the end of the world. That's the end of the $20 trillion of government debt and the hundreds of $1 trillion of all kinds of debt around the world. So, he's kind of in a corner. He talks at one side of the mouth, and then, I want the weak dollar, but I want the jobs. And, again, when you run into the reality that you can't do all these things, people see it. I mean, we're not going to have a replacing of Obamacare. We're not going to have all these jobs flooding back into the country. And if we did, then it would mean that the price of a car would be dramatically higher, or we would have massive inflation from the money printing to subsidize them.
Do you think that's what he wants? Do you think he wants massive inflation right now? The way he's doing this and he's setting everything up, do you think he has another plan in mind? Maybe to cause inflation, maybe to bring down the economy?
Well, when you're in the 1%, right, or now it's the 0.1%, inflation is your friend. I mean, when you own, yes, to an extent, it becomes hyperinflation, of course, and the currency value just collapses. That's bad. But if you get what we've had before, where the money printing is just funneled into financial markets, that's great for him. So he's happy. He thinks inflation is good, even though it hurts the majority of people. But he thinks if he does some populist, protectionist things to get a few jobs, that they won't notice what's going on. But again, it's a trade-off. If you try to do these protectionist things, you're going to wind up causing inflation in another part of the economy, and people are going to be upset about it. And of course, if you try to steal jobs with uncompetitive protectionist measures, you're going to invite response from Mexico, from China, and from everyone else. It's not like again, they're the ones with the cards, because while we can institute measures, they can institute measures too, and they are the ones that have the low cost labor in the first place. So they can take what we're doing and do it a lot more.
You talked about rates, and the Fed said they're going to be looking at raising the rate 3 to 4 times in 2017. Do you even think that's a possibility?
No, of course not. They said they were going to raise it 4 times last year.
Yes.
And in fact, they said it in January. And the only time they did it at the end of December was, well, one, because they had been able to goose the stock market at the end of the year enough that it gave them cushion, because they wouldn't dare do it if the stock market wasn't rising. But also because in their own words, we need to preserve credibility. As if they had any credibility left, because there was no reason to do that. I mean, the economic data has been terrible. It was rolling over at the time, let alone with the uncertainty regarding it. But they did it because they had to desperately try to do it. They pushed the stock market as high as they can, manipulated markets as much as they can, and they held their breath, and they got away with it. But the fact is, interest rates have surged. In fact, actually, the other reason they did it was because rates had done so beforehand. They raised rates 25 points after the bond vigilantes had already raised them 75 points. So they kind of were just behind the curve. And those 75 points have had a huge impact. You've seen an absolute plunge in mortgage applications and refinancing applications. I mean, God, I just wrote an article the other day. First Trump, then Dudley, yelling next, because you had Bill Dudley, the president of the New York Fed, who's the second most important guy on the Fed, saying right after Trump's weak dollar thing, we need people to start refinancing their houses and cashing out equity. I mean, you can't believe you're hearing this from the monetary leaders. And how is that going to happen when you have refinancing activity has gone to nothing because of rising rates? Well, you do things to make rates go back down again. So again, you got Trump, you got Dudley, you got Steve Mnuchin, all talking about doing things that are going to make the dollar weaker. And of course, you have Janet Yellen, who, if she wants to keep her job, not that I really think she has a chance, she certainly is going to have to help the cause. And also, if she raises rates, she's going to destroy the economy. I mean, when I wrote that article, 2.5% enough said, what I was saying was, I had written back in early 2014 when you had the taper tantrum. I said I wrote 3% in upset and then 2.6% when rates were sitting around that level. I said rates can't go above this level, the economy will collapse. Well, here we are 3 years later, and it looks like 2.5 is the level rates can't go above because no matter what, quote, good news they put out, rates are going down. They stop at 250 and they come right back down because anything higher is going to destroy what's left of the economy. So no, the Fed's not going to raise rates. They're insane. We're going to see the evidence of this. I mean, look, we've been in a supposed recovery for like, what, 8 years now? Don't we ever have a recession, even though, of course, we are in one? But eventually, the reality is going to hit, especially once all this, the Obama administration spent $500 billion in the last 4 or 5 months of the year trying to get Hillary elected. And, that money, that's going to, the effect of that's going to pass by, too, let alone now that you have the stronger dollar and the higher rates. So I don't think the Fed has a chance of raising rates 4 times this year. If they do it once or twice, I would be shocked.
Now, when Trump was when he was campaigning, he talked about the Fed, and of course, Hillary Clinton didn't like that at all. Do you think Trump is going to make a move to get rid of the Fed?
No, I think that's ridiculous. Like I said, he personally is incentive to keep the system as it is. And again, all the things that he criticized the Fed for when he was in office, like, oh, it's a big, fat, ugly bubble. He was just doing it just to get people upset so that they would vote for him. But he has no incentive to do that. I mean, look, if you try to take down the Fed, when the Fed is the only thing that's been holding up the market, everything crashes on your dime. And like any politician, he is going to go hell-bent of trying to fix things without having a recession. That's what politicians do and central bankers do. They try to fix things without a recession. Oh, well, things are this bad. Well, if I just do protectionist policies and repeal Obamacare, everything will be great. Of course, all those things only make things worse. The more government you have, the worse things are. And especially when you're talking about protectionism in trade, which is ironic because he's repealing NAFTA, but he wants to do even more draconian things, that restrict trade. So I think, when it comes down to it, he's going to try, like everyone else that wants to remain in office and keep the fame, fortune, and glory, to prevent the inevitable. And you can't prevent a recession forever, and you can't prevent a parabolically growing debt from having to be repaid. You just can't. And when currencies are already crashing around the world, and economies are already crashing, when you institute these kind of things, it just is going to make things worse. It's that simple.
Andy, you wrote an article, and the title is The Upcoming Cataclysmic Financial Big Bang to End All Big Bangs, and then you upgraded it from inevitable to imminent. What do you mean by that?
Right. Well, actually, it goes back to a year ago. Actually, it goes back to April 2015 when I first said a big Chinese devaluation was coming. And then literally 24 hours before they did the initial devaluation in August, I wrote The Upcoming Cataclysmic Financial Big Bang to End All Big Bangs, saying the ultimate deflationary event, the ultimate trade currency war event in the world would be the Chinese devaluation. We all know is coming. They have to do it. They peg themselves to the dollar. The dollar gets strong during a time of crisis. And you look at what's going on there. Their economy is crashing. So they started the process back in August of 2015. They haven't done when I say the cataclysmic part, I mean a big devaluation. Right now, they're up to 15%. I think they're going to do a lot more. And when we were early in the year, when they were instituting massive capital controls and the yuan almost went below 7 to the dollar, which is like this big key psychological level, to the point where capital flight would have really accelerated. It was looking pretty much like it would happen. Now, the Trump's weak dollar comments have given them reprieve because right now it's taken pressure off of them to devalue because the dollar has come down a little bit. But it's not going to change that they're collapsing historic bubble much because the dollar went from 103 to 100. It's not going to change the fact that they have the biggest bubble in history and that it's bursting. So I think it is. And the way I wrote this one, I wrote upgraded to imminent with a question mark because it's like I was just saying, well, look what's going on. It's starting to look like it could happen, but they bought a little more time. But trust me, the dollar goes up in any way, shape, and form again, and we'll be right back on that doorstep of the yuan breaking 7 and the capital flight. And inevitably, it has to happen because again, there's nothing that destroys currencies more than economies more than fixing currencies. And the Chinese bubble is the biggest in history as a result of this peg, which must break.
Now, there are those out there saying that we're not going to make it out of 2017 without a collapse, without the economy declining quite a bit. We already have the IMF out there, Christine Lagarde. She's saying, because of Trump's policies and because of the Brexit, they're looking at 2017 and it doesn't look that great. Yellen is already saying that the labor market, it doesn't look like it's growing and it's not as strong as we thought it was going to be. From what you're looking at, what do you see in 2017?
Like I said, look, the economy is now, I think it's like the third longest, quote, expansion in U.S. history, which is so ridiculous because nothing has happened. I mean, quantitatively, you look at the numbers and you go, is this even an expansion at all? And of course, you know that the numbers are cooked for inflation and all kinds of other things. So the fact is we're in a recession right now, and we have historic overcapacity. Pretty much across the board. I mean, why do you think OPEC's making this desperation deal, which isn't even a deal, and eventually it'll be called out for the lie that it is? And the real numbers, forget the soft numbers like the hope and expectations of these diffusion indices. The real numbers are horrible. I mean, retail and industrial production are falling, and in real terms, they're falling even more. Existing home sales, everything in real terms is going down. And Trump wants to try to create some infrastructure plan. It's only going to make things worse because you're going to have a skyrocketing debt. And that's if he gets through the debt ceiling issue. Remember, the debt ceiling suspension ends on March 15th. So he's going to have to get authorization for this massive spending plan, which everyone's going to see right through as nothing but a massively inflationary measure. So I just think it's just impossible. How can we get through another year without even the government cook data realizing that we're in a recession? That's what I believe strongly, especially because this tiny move up in the dollar and interest rates has had a massively negative impact. And if Trump tries to do all these things, these inflationary things, he's going to make interest rates go up further.
So when the economy starts to fall apart and people start to take notice, usually people take notice when the stock market starts coming down, then everyone goes, oh, wait, what's happening here? How do you think Trump is going to handle this?
Right. Of course. Then that's the key thing. People notice when the stock market goes down. That's why they had to double and triple up their efforts to support it after the Trump victory, because it's not like anyone's invested in the stock market anymore. I mean, 60% of Americans have less than $1,000 of savings, and everyone lost their shirt between the 2000 and 2007 and 8 crises. They lost everything. So, yeah, I mean, there are some people watching, not as many people as used to be watching, but from a global capital perspective, if the stock market was ever allowed to fall or fell on its own volition, that would ignite everything right away. I mean, the Fed would immediately cut rates and talk about QE4, and it would be pretty obvious that the shock to the confidence of the consumer would be immediate, and that's why they're so desperate to hold the stock market up, which is completely artificial. But but the real data just keeps to just grate down on them, kind of like Chinese water torture. And the fact is, it's obviously not just here; it's everywhere. I mean, look at India, right? I mean, there's 1 billion plus people over there. Their economy has gone from, quote, a 7% grower to it's negative. They can say whatever they want. It's falling apart. China is just reported its lowest GDP number, which is probably should be negative also ever. And I mean, look what's going on in Europe right now. You could have a bunch of the countries leaving the European Union. It's complete political chaos. Most of South America is like that right now. So, where's the pocket of strength? What's going to support the world? And the thing is, again, that strong dollar has caused so much damage to the world that it's almost irreversible. And if they do somehow manage to get the dollar to fall down again, well, good for gold. But it's going to be we're talking about shocking volatility in financial markets.
Andy, hey, I appreciate you coming on the X22 Report Spotlight. Really do. Once again, how can people see your work?
MilesFranklin.com. Miles Franklin has been in business now for 28 years without a single registered complaint. I write every day for free. You can call us at 800-822-8080 or email me at ahoffman@milesfranklin.com.
Andy, once again, thank you very much for being on the Spotlight.
You're very welcome.